Welcome to the revised HHA Medicare Cost Report, Revisit the Old and Learn the New webinar, presented by the Visiting Nurse Associations of America. A highly respected member of the home care and hospice industry for more than 36 years, Tom is a nationally recognized expert in Medicare reimbursement. He serves as Simione's Vice President for Reimbursable Services and is based in Raynard Park, California. Prior to joining Simione Healthcare Consultants in 2014, he was principal with Boyd & Nicholas, the Cost Report people, a consulting firm he co-founded in 1993 that grew to become one of the leading financial consulting firms for home care and hospice agencies. With expertise in cost reporting, financial analysis, due diligence, and accounting, Tom served as an intermediary auditor for 12 years and a consultant for 5 years before founding his own company. He is a frequent national, state, and regional speaker on home health, financial, and compliance issues. I'd now like to turn the presentation over to Tom.
Thank you, Heather. Good day, everybody. I've been in Medicare since 1977, and I fell in love with cost reports then and still do. If anybody wants to hear my 3-day program, please contact me. I'd love to present it. Did a few of those in the 90s, but unfortunately not since. We're going to talk about the cost report now, 1728-94, which has been a little revised by Transmittal 17. So our objectives are to discuss the purpose of the cost report and the filing process, discuss what is new, which is worksheet S-2-1 and the worksheet O series for the HHA-based hospice. And we're going to discuss the documents that go along with the cost report in the form itself. And lastly, as time permits, we'll talk about some compliance issues and the use of the cost report for management information. Now, the cost report submitted annually to the MAC, Medicare Administrator Contractor, supposedly for settlement of costs for healthcare services. And why is cost reporting so important? Well, of course, it's the government, so they're involved. But more importantly, it's setting the rates. It's used in that right now. We're in the last year rebasing. That's based on the cost reports. It's based on the 2011 cost reports and the 2014. In the 4-year period, we have rebasing, and the rates are adjusted by the cost reports and the rebasing effect. Now, as what CMS found out is that only some 60% of the cost reports are usable. 40% of the cost reports are solely poorly prepared that they cannot be used. What's interesting, too, is CMS did an audit of 98 cost reports from 2010 to determine if reimbursement would differ if we were still on the cost reimbursement system of the 90s. What I find interesting about that is that they were flawed in their approach because none of those auditors were familiar with cost reimbursement in the 90s, and few of the providers were too. But more importantly, there was no incentive for response because it didn't matter if you responded or not, there was no effect on the providers. And lastly, and most interestingly, 8 of those cost reports were turned over to zonal program integrity contractors, which means even in this day and age, under prospective payment system, the auditors found data within 8 cost reports of the 98 that led them to believe there was Medicare fraud. So you can see people are still looking at cost reports, and cost reports are important. We also have the RACs, the ZPICs, CMS, and the MACs, everybody looking at the cost reports. Now, we look at the volume, and this is from the MedPAC March 2017 report, which, yes, hasn't been published yet. There was about an $18 billion program, 3.5 million users, which I find interesting in why this is here. I should have done a side-by-side, but this is virtually the same information we had in 1997. Also 12,000 agencies, similar to now. Also around $18 billion in spending, similar to now. And the government and CMS were so upset with home care, they instituted the interim payment system so that by 2000 there were less than 7,000 agencies and there were less than $8 billion in spending. So hopefully we don't have a return to that with the attitude of CMS and governmental agencies. Medicare profit margins are increasing, which is some concern because every time the profit margins go up, MedPAC calls for a rate reduction. They're currently called for a 5% decrease for next year, 2018. So the profit margins are always higher than they've estimated. And this year it's estimated 11% for 2017. Now, the NOC information is similar profit margins and also increasing. What's interesting from the cost report, and you should be concerned, is that about 3% of the cost reports show profit margin greater than 50%. Some 30% of the cost reports show a profit margin greater than 25%. CMS, the government, are using data mining for all their reviews, including fraud investigation. And you were one of these 30% of agencies, I would be concerned about what's my cost report showing that the government would take a look at me because I have excessive profits. Now, it is somewhat misleading in that you're supposed to be disallowing costs like marketing, which actually increases your Medicare profit, because unlike other businesses, everybody does marketing. Medicare Advantage plans have it built into their rate. Home health can't, and hospice are not supposed to do marketing and remove it, which increases your profit margins. But consider your cost reports being used for data mining, and if you have excessive profits as defined by MedPAC and CMS, certainly if it's greater than 25%, take a look at your report. And it's consistent. PPS shows that there's losses on outlier, loop, and PEP episodes. This is from the MedPAC 2016, just to show you that the more efficient you are, generally the higher profit you're going to have. You're going to be a little bigger than average. You're going to do less visits per episode and have a lower cost per visit, all of which somewhat makes sense. So as the government's cutting rates, you need to take actions to survive. Now, who has to file the Medicare cost report? If you're Medicare certified, you have to file the cost report. You could be either provider-based, which for home health would be either hospice or SNF-based, or you can be a freestanding, which the bulk of home health agencies are freestanding. The reports are filed annually. They can't be more than 13 months, and they have to be at least 1 month. You can generally pick your fiscal period, so if you're not a 1231, which most places are, you can request a change if that is what you want. Now, less than a full cost report for low Medicare utilization LMU is you've received less than $200,000 in Medicare reimbursement or payments for services provided you in that fiscal period. Now, no Medicare utilization is simply a letter to the MAC that says that. Now, if the MAC doesn't get a full cost report, LMU or NMU, they are going to put you on withhold. So even if you're Medicare certified not doing any business, do send in the letter. CMS now estimates with the new transmittal, the new revised cost report form, that's going to take you 227 hours to collect the information, review the instructions, gather and complete the report. So if your office looks like this lady, you need to start working on the process. Now, the aspects of the cost report are deadlines. Let's talk about deadlines. And then many of you listening, and then many of those that aren't listening, think, well, what's the concern? I'm in December year end, I don't have to file the darn thing to the end of May. However, that is true, but it gets to a rejection. If you were part of the bad 1%, you're going to have a cost report rejected because you forget to sign, the ECR disk is flawed, the wrong person signed the report, it went to the wrong address. There's a multitude of reasons why cost report can be rejected. TSA used it for a Frisbee, whatever. If the cost report is rejected and it's rejected notice is received by you after May 31st, assuming you're 1231 year in, you are on 100% withhold. Now, if you file the cost report in March and you get the rejection notice like April 1st, you have time to submit a corrected cost report so that you're not subject to withhold because the MAC would have received it prior to May 31st. Therefore, it behooves you to file early just to avoid any difficulty with the 1% possibility that you're going to have a rejected cost report because you don't want to be on Medicare withhold. The report has to be filed on ECR disk, or should be. I will say all the MACs now permit electronic filing of the cost report. Simione does not do that, and we do not recommend doing that. For simple reason is it's still a signature document. You have to sign, and for the encryption page of the cost report, the signature page has to be sent separately because they're not set up to accept electronic signature. So my feeling is if you're going to send it in separately, you're going to have to send it in overnight or postal receipt, read receipt received. Why not go ahead and send in the disk in the same package? You decrease the likelihood if something goes wrong. If you're sending 2 documents separately, you got twice as much likelihood something's going to go wrong than if you send 1 document. If you send 2 documents and either one would cause your cost report to be rejected, either electronic filing or the signature, which comes along separately, you're on withhold. So at this point in time, until the government's geared up for accepting electronic signature, we recommend that you go ahead and overnight, or United States Postal Service receipt received, the cost report along with the signature page so that the 2 are together and there's no likelihood that they will be separated or one will be accepted and the other ignored. You have to file on the CMS approved cost report software, and there's 5 companies do that, and it's a signature document. Now the signatures, we've seen cost reports rejected because the secretary signed it, but it was secretary of the board of directors. However, the MAC assumed when it was said secretary, it was the secretary in the office, which is not qualified to sign the report. Now those of you who don't think the cost report is important, maybe it's not as important for Medicare, even though it sets a national rate. We're all part of the same pool. It's a global national rate setting of your prospective payment system. Even the new system that's under consideration for 2018 and beyond is using the cost report. So the better you do the rates. I mean, if Susan in Florida does a bad cost report and Pat in California does a good cost report, they're somewhat offset because they're in the same pool. So the industry is affected by the bad cost reports, the 40%, but even worse, the ones that are flawed. Now, if your cost report is used in any way, shape, or form for Medicaid rate setting or Medicaid reimbursement, and there's like 7 states that's the case, Texas, Idaho, Indiana, Iowa, and a few others, then you can be prosecuted for cost report fraud under the Medicaid program, even though it's a Medicare cost report that you filed incorrectly or improperly. So you definitely need to be careful to report if you are in one of those states, because there is some repercussions from a legal standpoint. Provider statistical and reimbursement report is important. If you're not registered, you need to do so. However, I will say when it comes to the Medicare settlement data in your cost report, you have the option of using the PSNR information or your own billing records, or a combination of the 2. So don't be like the young kid screaming about all the work you got to be do. Start early. Don't wait. There's a list of the cost report approved software companies. You can go to the website and determine which one you want to use and best pricing. Now, if you know what state you're in, and I don't mean state of confusion, you know what MAC you have to deal with. Now, this is true 99.9% of the providers. There's a small, very small group. If you were certified in the 90s, you might have had an alternative intermediary, or if you were a part of a chain at that time, you might have a different intermediary. But for 99.9% of you, that if you know what state you're in, you're going to know which MAC you got. Now, I give the websites. Why do I give the websites? Well, you can find things, for example, like electronic filing of the cost report if that's of interest to you. But you also find information about the CMS 855A, Medicare Credit Balance Reports, seminars, road shows. NGS has done in-services from every place from Wisconsin to San Diego. I think at this time of year they probably preferred San Diego. But you need to be on their listserv to get information to be informed of what's happening. The Medicare program assumes you have perfect knowledge. If you don't think that's possible, just think your difficulty of claims. The same relates to, as it relates to everything Medicare financial. The cost report has to be on the accrual basis of accounting. Medicare does not care how you file your tax returns. Medicare does not care how you keep your annually required budget. Medicare does not care if your internal records everywhere is on the cash basis. However, for the cost report, you are to be on the accrual basis of accounting. Revenue is recorded when it's earned, regardless of when it's collected, and expenses are recorded when they are incurred, regardless of when they're paid. This is why if you're considering a low Medicare utilization cost report, be aware that $200,000 is on the accrual basis. Don't say, well, I've only collected 110, but if you have 100,000 more coming in claims pending, that's going to put you over the 200,000. For the cost report requires you to be on the accrual basis of accounting. You do a conversion year-end, most of your QuickBooks, and it's a little work, but not that hard. And there's the textbook definition. Now the cost report's a set of documents. It's not a standalone. Along with the cost report, you're going to send in your financial statements that you use to prepare the cost report, but also your financial statements if they're prepared by a CPA. Now the CPA financial statement is not a requirement of Medicare. You do not need to have a CPA audited, reviewed, or compiled financial statement. However, if you do have such, you have to provide it. You have to disclose that it exists. If you don't have it at the time you file the report, then simply state that it's done and will be available later. And so you can use your own internal financial statement to prepare the cost report. You can use a draft CPA statement to prepare the cost report. But if you have a financial statement that is prepared by a CPA, even if it's not ready at the time you file the cost report, you need to disclose that fact and indicate that it's available later. You have to send along your working trial balance, which is basically how you got from the general ledger to the Medicare cost report, because the accounts, of course, don't match up. And you have to send the work papers schedules for the cost report reclassifications and adjustments, the worksheet A4 and worksheet A5. And you need to sign. One of the MACs and us recommend you sign in blue ink, because gosh golly, cost reports have been rejected because the original signature looks so much like the page they were on that the MAC assumed it was a copy and rejected the cost report. So you definitely want a color that's different on than a copy of the page, what it looks like, so they can tell it's original. In the 90s, I would tell clients to sign it in red, because at that time, even Medicare cost reimbursement, you were in the red at best anyway. You need a good chart of accounts, and if you need one that's a little more simpler than this one, so it's a little hard to use, send me an email and I'll be glad to send you a simple one. So the clock is ticking. Start working, getting your information ready. Don't wait till the last minute. Now we talk about what's new. Transmittal 17 to the cost report is effective for fiscal year ends 9/30/16 and after. So if you're September 30 year end or after, of course, most of your 12/31/16s, this change is applicable to you. The old provider cost reimbursement questionnaire to 339 it no longer exists. That's why you only sign in once instead of twice. Most of the questions have been folded into worksheet S-2-1 within this cost report. Now, some interesting questions is now they want to know if you have a financial statement prepared by a CPA, but if it's not available at the time of the cost report, they want a date when it will be available. So this is a slight change from before. Now the question, technically you're supposed to send it in later when that date becomes, but realistically, I'm suggesting you just indicate when it'll be available, and if they want a copy, they'll ask you for it. Otherwise, again, you're going to have a situation where you're going to send in a document that has to be matched with the file, which by then the MAC has copied and filed away. Most importantly, and I think it's a step in the right direction, is that the S-2-1 asks for who prepared the cost report. They want to know the name and the contact information for who prepared the cost report. Now, obviously, they're looking to make their life easier. They should have done this 20 years ago. Just trying to run down who, if they need additional information. But hopefully, it's the first step, so cost report payers will at least become like IRS, and we have enrolled agents. I think every cost report payer should have to take a test and be more familiar with the purpose and the intent and the flow of the cost reports. My hat's off to Texas, at least requiring the taking of a test and classes for preparation of the Texas Medicaid report. And there's what that looks like in the new S-2-1. And of course, as before, the cost report has to agree with the financials that are being used. So if they don't, just indicate that and prepare reconciliation. Now the other new thing is if you're an HHA-based hospice, and there's only 500 according to the latest numbers, you have entire new O series replacing the K. Now it doesn't just replace the O series, the K series, it's entirely new requirements. The new O series is modeled after the freestanding hospice cost report, and with the same data requirements, the same complexity. It's completing the O series. It's much more difficult than completing the old Ks. So if you have an HHA-based hospice, I strongly recommend you listen to a hospice program, hospice cost report program. What I see done here is to give you in red highlighted is the O work page that corresponds to the hospice cost report page. So if you listen to a hospice cost report webinar, you could do a translation of which the O schedule affects when they talk about the other schedules. Because the O series is modeled after the new hospice cost report. Well, new hospice cost report, the 1231 will be the second year. Now again, cost report, we've got the certification page. The most important aspect on the certification page, other than your signature, is the fact that it should show zero balance unless you have Medicare flu reimbursement. And less than 1% of you now do flu shots. Walgreens and Walmart and CVS seem to dominate that market. So you should have zero balance. There should be no monies identified due to the program or due to the provider at the bottom of the page. Now what had occurred in the past is because people made mistakes doing the cost report, they had monies going both ways. Now if monies are due to you, the government's not going to pay it till they're subject to audit because it's a mistake. They're never going to pay it unless it's flu shots. If it's money due to the program, they immediately collect it because their system is set up that way. So you want to make sure you're not showing money due to the Medicare program. You did something wrong in the cost report if that is showing that way. That's for Worksheet S. S2 is just general information, pretty well consistent. S3 is utilization statistics, which is going to be your patient visits rendered during the year and later Medicare visits for closed episodes, your FTEs, Worksheet A series, which is trial balance, BMB1, which is cost allocation and cost finding, Worksheet C, which is where your cost per visit comes from, Worksheet D and D1 is just identification of your Medicare payment app for episodes, and the F series, which is the financial statements. Here again, be careful. The F series should agree with the financial statements that you're submitting with the cost report. Do not think you could not send in the F series because you're making the attachment. The F series does need to be completed. And the beauty about cost report software, I will say, is it's going to have edits. And if you follow the edits and clear the edits, particularly you have to clear the level 1 edits because the cost report will be rejected if you don't clear the edits, and then it will help you complete the form appropriately. Now S3 is the patient's visits statistics. Now be careful here, Medicare Advantage patients are other. They're not Medicare for the cost report. The Medicare Advantage plans account for them separately and report it separately. As far as you're concerned, they are other. Too many times we see Medicare Advantage included with Medicare, and that is not proper. And you're going to do your census, your home health aid hours. Now if you don't track your home health aid hours, you can make assumptions like 1 hour per one visit or 2 hours one visit. And of course you're only including billable visits, intermittent services, and there's the definition and the criteria. Now Medicaid, some of it could be considered homebound if only one criteria is missing. I got an old HCFA memo from 1997. Anybody want a copy of that, send me an email and I'll send it to them. Full-time equivalents. We're suffering having to use the hospital wage index, wage information, because in 1993, the government tried to use the HHA cost reports for salaries and full-time equivalents to determine the wage index, and the information was so poorly prepared that the industry backlash caused HCFA, now CMS, to drop that idea. It was just a big mess, so they converted to hospitals, and I guess we're stuck with that forever. But you could still get some useful information, and the FTE is your total paid hours by employee type divided by 2080. And you got to identify both employees and contractors. Now, some of you are going to have trouble with contractors because they don't really want to tell you the information. Here again, you could use a factor like 1 hour per 1 visit. And if your payroll system doesn't tell you for employees, you might use it there also. An alternative approach, you use the home care salary and benefits report, because these are visits performed on average in an 8-hour-a-day workday. So if that used in this factor, you can well determine what your FTEs are for both your contractors and your employees, should you choose to use an alternative. And 3.4 is episodes closed. One of the things we see wrong is the top part of S3, which is visits rendered during the year, agrees with the bottom part of S3, which is Medicare visits closed during the year. They should not be in agreement. Think about it, because not all the episodes have closed on December 31st, so that Medicare visits rendered during the year should not agree to Medicare visits for closed episodes during the year. And so the cost report flows visit statistics, costs, classes, adjustments to cost, and so forth. Now I'm going to show the form, but here's the 5 columns, first 5 columns of worksheet A. These columns are going to pertain to all and every cost center: salaries, employee benefits, transportation, contract services, and other costs. The reason you do a crosswalk or working trial balance is because the other costs tend to get rather big, and there's a multitude of accounts, particularly for administrative and general, whereas your chart of accounts in your general ledger, you should have a lot more accounts than the cost report accommodates. Now, the general cost centers, the overhead cost centers, are these 5: building, equipment, plant operation, transportation, administrative, and general. Not everybody's going to have all of them. Building, you should have, that's going to be building depreciation, rent, equipment cost. Plant operation and maintenance could be security, housekeeping, janitorial, landscaping. Transportation may not be affected if you charge your transportation costs by cost center. You might have some for administrative and general. Now the disciplines, these are Medicare Reimbursable Services, are of course the 6 caregiver lines, medical supplies, flu, if you do flu shots, durable medical equipment, which I haven't seen a provider do since 1997. And medical supplies you should be splitting into 2. NRS, which is a new acronym that was given to us as a result in 2008 when CMS says that's what we're going to call billable medical supplies now, NRS, non-billable, non-routine supplies. Based on 2003 cost reports, CMS says nobody's billing for non-routine supplies or the billable supplies. They still make that statement. But you're supposed to be separating your supplies, with the billable supplies going to line 12 and the non-billable going to line 5. The concern people should have is based on CMS's belief they're going to be adjusting the PPS rates and shortchanging, for example, wound care, because they say nobody's billing for it or providing it. And this could have an effect on all of us. Now you also have non-reimbursable cost centers. Program says telemedicine is a non-reimbursable cost center, along course with non-skilled services, private duty homemaker, anything else. The hospice, the new O series. Reclassification, simply moving costs between the 2 cost centers. You might do that most commonly for medical supplies. If you have them all in one bucket, either line 5 or 12, you might want to move some of that to the other line. Line 5 is administrative and general, other cost. Other income offsets and non-allowed expenses. Marketing is legal for most cases. They don't pay for referrals, but it's a non-allowable cost. Hence, that's why Medicare profits are probably overstated, and has to be either removed from the cost report or a non-reimbursable cost center. And there's a list of others which I have provided. Now, worksheet A6 is disclosure and calculation of related organizations. Now, I'm real big on compliance. I'm not real big on doing the nth degree of technical calculation to determine what is the cost to related organization. There's next 4 or 5 slides will explain that in more detail. However, if you engage in services from a related organization, at least disclose the fact, and if MAC or Medicaid has a question, they could come and ask you. A little later, I'm going to show you a case where they would have saved the provider a lot of grief had they done so. Disclosure is the key. The MAC, Medicaid, ZPIC, anybody has the option, the right to come ask for information, but if you don't disclose it, it's going to go a lot worse for you. Now, what I call related party, most common is you're renting the building from one of the owners of the agency. The building's not owned by the agency, but it's owned by one of the owners. That's a related party. Or you're buying medical supplies from the sister of the owner. That's a related party and needs to be disclosed. Or you're using a physical therapy, which is the spouse of one of the owners. That's a related party and needs to be disclosed. Technically, you're supposed to reduce it to cost to the organization, removing all profit factor, and these pages go through that process. However, the key to me and the key to you should be at least disclose the fact, and if the MAC or any governmental agency has a question about it, they could come and talk to you, tell you what they want, and then you provide it. So related to the provider, control or associate, but family relationships does contain the aspect of control. Okay, that's all talked about there. Home office, if you have a Medicare home office cost statement, you're going to include those costs. Now we get to worksheet B, the overhead cost centers. Remember I said there's only 5 of them, and maybe not all of them are being used by your organization. The costs go down. In other words, capital-related cost building is allocated first, and it's allocated down to the other cost centers, then equipment, then plant operation, then transportation, and last but A&G. Now, can I see a show of hands how many use square footage? Yeah, I'm being a little silly, but I bet if you were all in front of me and I asked that question, I wouldn't see but a hand or two at best. Nowadays, very few providers are using square footage for allocation purposes. So if you're one of those, or you'd like to be in one of those that didn't have that option, or would have that option, you would show all your square footage in administrative and general. So for example, your building's 2,580 square feet. You would show 2,580 square feet for building square footage, and then the cost centers below, you would show 2,580 square feet for administrative and general. So all your building cost gets allocated to A&G. Same way of equipment, same way of plant operation. If you're not using square footage, you're going to show a statistic that shows that 100% of that cost center goes to A&G. You're not going to remove it. You're not going to group it with A&G on your worksheet A or anywhere else. Simply let the allocation method take care of it. You only required square footage was the original and had some importance in the 90s, but it's not as important nowadays. And again, with the disclaimer, it might affect your Medicaid reimbursement. And if you're one of the very few, you might have a letter from years back from the MAC telling you have to use square footage, in which case you still need to comply. But for the vast majority of us, simply put your square footage to administrative in general. It will make a lot easier for you than trying to deal with square footage and changes during the year. Again, be careful if you're a Medicaid state that I mentioned earlier. So this poor guy It's at the bottom of the step down. Again, all the costs come down. Capital related building is at the top, and the non-reimbursable cost centers and including telemedicine is the floor at the bottom. Costs allocate downward. You can't allocate costs from administrative and general, for example, back up to equipment. It doesn't work that way. And you get to worksheet C where you get your average cost per visit. Also your cost of NRS and the cost of your flu. Now, next few slides are to explain flu, and I'm seeing less than 0.5% of you now doing flu. I'm going to skip over those. However, there's some oddities to claiming flu reimbursement, Medicare cost reimbursement for flu. Medicare cost reimbursement exists for flu vaccine cost. And if any of you have one of those that are affected, please send me an email, and I'll be glad to explain that. You'll get some of that from the slides. Worksheet D then identifies the Medicare payments. Again, your data from the PSNR, you can use your billing system, whatever works. Medicare wants accountability. The MAC has an option of updating your settlement data when they receive the cost report. Sometimes they do and sometimes they don't. But they'll use an updated PSNR for that purpose. I recommend that you be registered for the PSNR, for if nothing else, it provides you a check your billing records. The PSNR reflects everything that's been paid by Medicare. So if you run a PSNR as of March 31st, for example, and compare it to your billing records for a year, you might have an indication of what's outstanding. Again, on an accrual basis. There's a link if you want to know how to sign up for the PSNR. Worksheet F is similar to your financials, balance sheet, income statement, statement of changes, fund balance, and again, they must match the financial statements being sent in and used for the cost report. Not necessarily the CPA statement if you don't have it at the time you're filing. Send that along later or make it available later. Now, some of the problems we have is commingling of visits. Don't do a conversion. If you have shift work and you're paying someone for 8 hours, that's not a skilled visit. Don't divide it by 4. Don't count it as 1. There's the HCFA program memorandum if you want a copy. I'll be glad to send it to you. Inaccurate FTEs. While you might think it's not important, it is a useful management tool. Cost reports should be filed on a cash basis, which is a no-no. Medicare has 6 disciplines. They like to see the salaries in 7, which including E&G. Too many of you have included salaries in 1 bucket, called cost of goods sold, and all the salaries are in 1. Well, the problem is you've got to break it out for a Medicare cost report. Maybe this is part of the 227 hours you want to spend on this. If you have a good, decent payroll system in General Ledger, you simply let that account for it because you're going to have to separate the salaries by the service line. And it gets even more complicated if your cost of goods sold bucket includes the non-Medicare private duty services. Other adjustments we've seen problems with over the years. Now, this sort of symbolizes what 40% of the cost reports look like. And I don't want you to have a cost report like this. But why is this guy holding his nose? Because of the skunk of a cost report? Because I will say, and this might sound contrary to my belief that cost report payers need to be enrolled like IRS, and that you should do a quality cost report because it's used for national rate setting and it's important for compliance in Medicaid and everything else. But the only thing worse than filing a bad cost report is what? Not filing a cost report at all, because you will be then be on Medicare cost withhold, Medicare payment withhold. Now, sometimes providers will ask me, well, can we file an amended report later? We're just rushing to get it in so we're not on withhold. That's fine in theory, but the MACs are no longer accepting amended cost reports. They'll just stick it in the file. It won't solve your problem. It's not the official cost report as far as the MAC's concerned. If you feel better for doing that, then go right ahead. But get the cost report in, even if it's a stinker, even if it's a skunk of a cost report, it's best to get it in so you don't have to file it. So yes, I keep a clothespin handy. There's some cost reports that are stinkers because you don't want to be on WIFO. It's even worse because if you're on WIFO for a rejected cost report or not filing a cost report, you go to the bottom of the pile because you could imagine the MACs are deluged, flooded with cost reports at the deadline. So many people wait to deadline. Remember, Medicare certified hospitals and SNFs and rural health clinics, everybody else has the same deadline you do. So they're flooded with so many cost reports that those that are late or rejected and resubmitted are put at the bottom of the pile. So you need to make sure you get on time. The only thing worse than a bad cost report is not filing. Again, with the disclaimer, be careful if you're one of the Medicaid states that are affected. The cost report's a compliance document. You can be prosecuted for fraud. Granted, the last case I saw for this was 2002, but they can get you for fraud, and certainly if Medicaid will come after you if they're one of the programs that are affected. You also have the issue of False Claim Act, and I'll show the ruling on that. Interesting. Now, despite the fact we're now in 2017, we're still dealing with the same Medicare reimbursement rules that were crafted from 77 to 99. So just get the cost out of there. In theory, I've suggested this before, you could literally remove all your Medicare costs by worksheet A5 adjustment and just let the payments go. Now obviously that shows you're beyond 1,000% Medicare profit, and it destroys it being used for management purposes, but that's the only way to know you're 100% pure. Expenses and prudent, reasonable, necessary, and related to patient care. Keep that in mind. Now there's certain rules. For example, the costs that are allowable, costs that are not allowable, costs that are offset, interest income is set against interest expense if you have it both. Alcohol, there was a Christmas party in Kentucky. Hospital Corporation of America spent $25,000 on alcohol. It upset the government to the point we now have a specific regulation disallowing alcohol expense. So that worked out to about $30 a person, which for Kentucky bourbon is probably not a bad deal. So I gave you a list of them. If you're conscious of the situation, fines and penalties, the program assumes you have perfect knowledge, so that you wouldn't know such thing as fines and penalties. And of course, all marketing salaries. 20 years ago, someone asked the CMS director, HCFA at the time, about health fare, and he said it's not allowable. So now it's ingrained in sand that it's not allowable, even though it could be a job fare. Okay, so there's a number of those. Medicare allows you to expense anything under $5,000. This will not be the same if you're IRS, possibly. In the old days, you had to keep 2 depreciation schedules. I wouldn't necessarily worry about it. Again, if you're in a Medicaid state, Texas specifically has a different capitalization policy, so you need to adhere to that if you're participating in that program. The whole tree of course is we don't want to be by bugs, pounding rocks anywhere, because as a reminder, this is a signature document. You can be prosecuted, and people have, admittedly not lately. You're signing that you're familiar with the laws and regulations. You don't want to be loose. Now I said earlier it affects Medicaid. Here's a situation where this organization did not disclose that they had related party transactions, and they did not remove what was considered non-reimbursable travel and entertainment. Now, the non-reimbursable travel and entertainment might have been subject to audit, but disclosure. The related party, had they disclosed this, at least it might have reduced the amount in question. It certainly would reduce the bad press and being prosecuted for fraud and the False Claims Act. I can't imagine that the amount of injury to the Medicaid program was as great as the $1 million that resulted in the payback. So disclosure on the A6, disclosure in the if you have a financial, disclosure related party. It's going to reduce your potential for kickback from any of the programs. Here's the situation where a whistleblower is suing 33 hospitals because they didn't disclose they engaged in related party transactions. Now, if he's successful and the $1 billion is viewed to be correct, he's going to get somewhere between $150 and $300 million for his False Claim Act. And of course, nowadays we're seeing a lot of convictions for physicians receiving fees for Medicare referrals. This case, I actually feel a little sorry for this Dr. Daly, who was a physician in that community for 20 years and got sentenced at the age of 68 to a little more than 5 years. The kickbacks they're referring to is he got some $9,200 over a 2-year period. It led to episodes that generated over $900,000. Now, if you got to think they're certified properly for home care or not, it seems like the cause and effect, they should have went after the home care agencies, if not more than the doctor. And other home care frauds. There's a few of those you can read at your leisure, take your link. This one I think interesting. I'll point out there's organizations that are using outsourcing their marketing. You have to be careful in that because the marketing firms, what's motivating them, of course, is getting the referrals. Marketing firms have been convicted of paying kickbacks, getting kickbacks, or arranging inappropriate referrals because their motivation is they're getting paid on how much marketing success they have. The compliance people will tell you better having your marketing people at least be employees, and there's some accountability. So the government said last year they recovered $3.3 billion and $4.7 billion from False Claims Act, and you don't want to be a victim of either one. Now, the cost report's just not a compliance document. It also can be useful for management information. It's beautiful. There's several firms that do this: BKD, SHP, FOSI, Simione Healthcare Consultants. It's a useful document because you could benchmark against your past. You could benchmark against state and national information. So you're going to spend 227 hours putting this document together, at least, possibly more. You at least might want to get some value for it. So for example, it will give you your visits by episode, visits by type. You can compare all this to state, national, and your peer group in town. Your cost per visit is important if you're doing any sort of contracting. You at least want your contracted cost, if you're doing a contract with MA, cover your direct. Ideally, you'd want your cost to cover total. But the principal contribution to margin, you at least want your contracts to cover your direct cost. The cost report will tell you what that is. Bearing in mind, you might want to run a special cost report as you add back in marketing and other non-allowable costs. So what we're seeing, a typical Medicare agency like this one, it started out with 23% Medicare profit with 2.6% time you get to the bottom line because of all the other factors. But you could slice and dice every segment and every cost report, every cost center to produce. So here again, compare your data to national and state, and you can see how you're doing, even the visits per episode. And you could also compare against your past. As close as I get, I don't have a stake particularly who does your cost report, but whoever does your cost report should be familiar with it, should know it, should be attending webinars like this one or VNA and other organizations put on, and be familiar and experienced in doing the cost report. Okay, I think it's close to asking I wrote some articles there for information. There's the links to the manuals if you want to do your own. Plus I also attached them, even though I accept only what relates to HHA and the O series. And there's my contact information. That is not me playing chess. If you want to send me an email or give me a call if you have any questions. And I think Heather, we have some question time now.
Great, thanks so much, Tom. At this time, we'll move into the question-answer session of today's call. If you have a question, please use the chat feature at the bottom right of your screen. And we did have a few questions come in during the call, so I'll go ahead and get started with those. The first question is, our organization is in the process of getting part of our business Medicare certified. We will basically have a Medicare certified division within our company. We're doing this so that we can bill our state Medicaid, Minnesota, for skilled nursing visits. We will not be billing Medicare. Does this affect how we report our costs as it relates to the Medicare certified agency?
No, if the provider is not providing any Medicare services, it would be a no Medicare utilization cost report. You still have to provide that information, which is, depending on the MAC, is usually just a letter to the MAC identifying the provider, the fiscal period, and that you did no Medicare business.
Great, thanks so much. And we did have a question asking where the PowerPoint can be found, and I will be sending an email to all registrants following the call with a link to the recording as well as the PowerPoint and additional information that Tom has provided. We do have a few other questions that have come through. Our CEO is out of the country. Is there someone that can sign the cost report for us?
Yeah, the cost report needs to be signed by an official of the agency. So the CFO, the CEO, Director of Professional Services, the Chairman of the Board of Directors, all those would qualify. Just indicate the title when the report is signed, so we don't have someone say secretary and think it's not the secretary of the board. But that would, all those would work. Any of those would work.
Thank you. We've not processed all of our claims. Could we delay filing?
No, you shouldn't delay for virtually most any reason, but because technically the MAC is supposed to update when they receive the cost report and subject it to desk review and later finalization or notice of program reimbursement. They're supposed to update for a later use of a PSNR. Sometimes they do and sometimes they don't. So it's not always a sure thing, but they have the option of updating the cost report at that time, and that will be sufficient. There's always going to be some activity that occurs after you file the report.
What cost report software do you use?
Simione uses HFS. Boyd Nicholas has used HFS since 1993. And their website's in the program. It's good software, and they're user-friendly.
Great. What is a PTAN?
We used to call them Medicare provider numbers, and now I see that the government's come up with a new acronym, provider transaction access number, and it took me a while to figure out what they were talking about, but in effect is the new term being used for Medicare provider number. And the MACs will use it more than most people in the industry because we're not quite there yet. It's like when NRS came out, it took a while for everybody to figure out what the heck they're talking about.
Thank you. Our computer system crashed and we've lost our records. Is it possible to get an extension of the filing deadline?
We've seen, well, over the years, as I said, I've been around a while, I've seen CFOs die, CEOs die, buildings burned down, floods, earthquakes, hurricanes. The only time CMS ever granted an extension was to providers as a result of Hurricane Katrina in 2005. So none of those other causes I mentioned were accepted as a reason for the extension. The most severe, of course, was the agency burned down completely back in the mid-90s, and they had nothing and they were still denied the request for extension and had to reconstruct a cost report from their tax returns and their old cost reports and a lot of estimates, and it was just gruesome. So no, you're not going to get an extension, even though technically the regulations permit the request. It's not going to happen. Next.
Great, thanks. A follow-up question from the provider in Minnesota. So if we use the no utilization report, we still have to report costs?
No, the no Medicare utilization NMU is basically a letter. Now, depending, the MACs, as anything, has the option of requesting, but just simply the letter is going to be sufficient. Some of the MACs require the financial statements to accompany the letter, but you don't have to pretty them up or isolate Medicare or anything else. Just send them in gross. It depends on which MAC. The easiest way to determine that would be to go to the MAC website, and should be listing the requirements for what you need for each level of filing. Or if you want to send me an email, I'll look it up and tell you, depending on which MAC it is. But most often it's just simply the letter. Okay.
Next question we have is, does cost report software have a trial balance feature in it?
The cost report software has a trial balance. Yes, it has. I'm thinking of HFS. It has a trial balance feature, so then the beauty of software is that it flows. So if you get edit messages, it's going to down foot and cross foot and everything else. And if you have a cost center where you have visits but no cost, it's going to tell you. So there's a lot of niceness to software that helps you complete the report and make it flow. Also, that once you've done the first year on the software, it helps in the second year because it will do a comparison from one year to the next. So there's some bells and whistles and benefits to the software that will help make the process go better.
Great, thank you. We will be under $200,000 in Medicare and able to file an LMU cost report. Any reason to file a full cost report?
Well, of course, to file a full cost report, you get the full management information if that's of value, because you'll get your everything disclosed, cost per visit, visits per episode, whatever. The other aspect, if you're a new agency, you have had to have been for 36 months in existence or have filed 2 full cost reports. So if you're newly started and thinking about selling, or you want to keep the option open of having to sell, given the business environment or your personal circumstances, whatever, you need to have filed 2 full cost reports or been in existence 36 months. So that might be a safeguard or safety net to have filed a full instead of an LMU if you're a relatively brand new agency, just to have that escape possibility if you need it.
Great. Well, thank you so much, Tom. It looks like we are at the end of our time here. So I would like to take this time to thank you all for joining us during today's webinar. I'd also like to thank our presenter, Tom, for sharing his expertise, time, and commitment to making this a successful program. Thank you all again for your participation, and I hope you have a wonderful